famous American novelist Ernest Hemingway said, the final signs of desperation for a debt-sick nation is debasement of the currency and war. And now as we enter 2026, we're clearly in those final stages of desperation. This is a dollar war. It is a U.S. Treasury war. It is an oil war.
Matthew, welcome back to the show.
It's fantastic to be here, Alex, as always. So I'm looking forward to it.
Well, I guess last time you were here, it was like about a year ago, and you laid out a brutally simple but right on the mark framework, which ultimately highlighted the ongoing currency debasement globally. Today, with the United States sitting on $39 trillion in debt, you have Federal Reserve Jerome Powell openly warning that the path will not end well, and gold pushing towards new highs. Your thesis is clearly in line. Looking at the world right now, is your original framework playing out largely as you expected, or have we crossed into this territory that even you didn't fully anticipate?
It's always impossible to kind of get the exact details, but history and math are pretty consistent. You know, the classic Mark Twain, history rhymes if it doesn't repeat itself. And you know, since I've been at Von Greyerz, Iga and I have always been talking about, if you understand basic math and basic history, the case for gold and the case for our business model, of course, is protecting against risk by having gold outside of the system, and the system is breaking down. And, you know, one of the risks we've always talked about is currency risk, of course, banking risk, market risk, but there's geopolitical and historical risk. And this thesis that was set up decades ago by Egon is something I absolutely agree with, and it's absolutely sincere. And as we look at where we are in history now, I've always said sometimes it's hard to see history when you're in it. Like fish don't notice the water because they're in the water. But you know, what we talked about a year ago and what I've been writing about for years is really nothing's changed. It's just now we're getting into the details. I think, you know, I'd call it a Gettysburg moment. It's an inflection point. I'm really into the history of the Civil War, but there's a lot of history here repeating itself in terms of hegemonies or powers at an inflection point, you know. And one of the things I've written about and talked about over the years, and as we're in this point, is I call it the 4 Ds of inflections, or some call it a fourth turning. But those 4 Ds start with debt. And obviously, when you're looking at the home of the world reserve currency, we're at 39 trillion. It's an abstraction. It's unsustainable. It's unpayable. The debt is a reality. When you have that kind of debt, the next thing is debasement, which you can look at with M2 money supply or the DXY. But clearly, there's a debasement trade, as they called it last year, which is just inevitable to monetize the debt. And the next D that comes after debasement is dishonesty. We've seen lots of examples of that, left or right, red or blue, whether it was transitory inflation or temporary inflation or managed inflation or targeted inflation. That was all just dishonest. Even the definition of a recession into 2022, as I wrote and said then many times, we were already in a recession. They just changed the definition midway through the game. And the final D that comes after dishonesty is desperation. And last year in 2025, I was looking at signs of desperation. And this is agnostic left or right. I'm an equal opportunist cynic when it comes to politics, especially in the US. But, you know, I looked at the Doge plan, the USAID plan, the tariffs will save us, stable coin will save us, AI will save us. Those were all desperate narratives hiding a major debt problem. And I think they're all culminating now in Iran in terms of desperation. You know, the famous American novelist Ernest Hemingway said the final signs of desperation for a debt-sick nation is debasement of the currency and war. And now as we enter 2026, we're clearly in those final stages of desperation. And this is really a pattern historically. And the math of debt and the history of these cycles is, for me, fairly clear. And in February, I was coming back from South Africa. I was in Amsterdam. I gave a public speech there, and I said openly that we're going to see regime change in Iran. And it wasn't because I had a crystal ball or some inside information. It was pretty simple, because you have to understand that the dollar and U.S. hegemony are very tied, and the petrodollar and the oil markets are very tied. The petrodollar, which we'll get into, is an absolutely critical pillar to the U.S. dollar, and the U.S. dollar is a critical pillar to U.S. hegemony. And all those things are cracking right now. And I think when you look at the petrodollar, you don't have to take my word for it. I mean, glibly, you could ask Muammar Gaddafi or Saddam Hussein or the Ayatollah Khomeini, but they're dead now. And even Nicolas Maduro in Venezuela was whisked away by the Delta forces. My point is, it's a deadly serious game to the U.S. and U.S. interests to keep this petrodollar going, to keep that sponge for U.S. exported inflation absorbed by forced energy purchases in the U.S. dollar. So before we get into all the details of gold and the dollar and the war and Trump, it's important, I think, to set out, at least my opinion. I don't think it's a unique opinion. I think it's fairly shared by most of us in the markets, certainly in the commodity space and clearly in the precious metal space. This is a dollar war. It is a U.S. Treasury war. It is an oil war. It is not an ideological war of freedom and democracy in Iran. And I said kind of glibly, despite whatever you think of Greta Thunberg and all her green energy ideals, we live in an energy-centric, not dollar-centric world. But if that dollar, having already welched on its gold backing in 1971, loses any major part of its oil backing, its petrodollar backing, it's very much a new game for the US dollar and the US hegemony. It's not game over, but it's a completely different leverage for the US. So we are at risk of reshaping the whole global order. And I think we have to keep this petrodollar and the politics and the economics of the petrodollar as the backdrop to any discussion we have on markets or silver or gold, COMEX or any other thing. And certainly the politics of this war. I am not a politician, thank God, and I'm not a military expert. I don't have a West Point degree or a star on my shoulder, but you don't have to be. If you look at the economics of this, I can talk to that pretty clearly. I think objectively, again, it's nonpartisan. And I think that's important too, without offending anyone's politics. The economics of this are far more clear and frankly, far more honest, whatever your political biases are.
Yeah. And with that, Matt, like you touched on something so true about like the dishonesty and just the desperation that we are in terms of global affairs right now. With that being said, like in terms of, there's still a lot of people in the mainstream that don't want to have their eyes open to this moment right now. And what do you think, like, what are most people still getting dangerously wrong about the current environment today?
Well, I think it's cognitive dissonance because I think most people are actually good people, despite, I think, it's kind of the 80-20 Pareto optimality rule. I think 80% of the world is a good world, and 20% of the minority, you could call the dark state, the deep state, the vague state, whatever, the power corrupts, absolutely. I think our distrust, not just with polls, and not even just in the US, we see it here in Europe and the EU, we see it with Germans' draft policies and this NATO allegiance. And I think there's just a palpable sense of distrust in leadership and the narrative. We don't have to say we can identify the dark state. I think Mike Lofgren's book is exceptional. That was years ago, before all of these headlines. That was from an insider. I mean, Bill Moyers interviewed him. He was not some quack. There was clearly an indication, if you want to dig under the hood or dig into the weeds, that whoever is in power isn't necessarily the decision maker, whether that's the Pentagon, whether that's AIPAC. I'm not here to talk about that. But it's clearly not just the person on the screen all the time. And I think the motives are economic, they're military, they're very much a small minority making decisions that aren't necessarily best for the majority. I think the majority, whether in Europe and certainly in America, trust the American dream, trust that no one's crazy enough to risk nuclear war because we're closer to that than we were during the Cuban Missile Crisis. They trust that cooler heads will prevail. They trust that these political mavens to careerism as opposed to public service will do the right thing. My experience, my reading, my personal experience is that's not always the case. We're well past profiles in courage. I think a lot of these political policymakers, Hemingway called them political and economic opportunists. I don't think they have the best interests of the majority in mind. I think that's clearly being felt now. And I think the reason that some people have their heads in the sand isn't because they're stupid or naive. It's because they're good and they trust. And that's sad. I think that trust is being exploited right now. And yet, with all that's happening, again, from Biden to today, with the deficits, what's happening on Main Street, which we should talk about, what's happening with the currency, the invisible tax of misreported inflation, the unsustainable debt levels, the palpable pain on the Main Street. I think that's becoming more felt, and the distrust is rising. So I don't think they're missing anything. They're slowly waking up. It's very hard to open your eyes to this when none of us have the answers. We can diagnose the problems. You or I are not going to change policy, whatever we think of that policy, whether we're even capable of doing that. But I think it's very sad because I come from the Midwest, from a small American town. It's the American heartland. It's a Germanic immigration population. It's very hardworking. It's very honest, and it's got a strong work ethic. And they just assume that DC or Brussels or London or the policymakers are going to be as honest as them. It's hard to realize, to wake up and see that may not be the case. Again, that's beyond left or right. I think we're just feeling a complete mismanagement. Again, as Hemingway would say, a mismanaged nation. And that mismanagement is palpable in the US. It's also very, very clear in Europe too, in these patchwork coalition governments in Germany or other places, these kind of election cycles, the warfare that we see from France to Romania. Who's really making decisions? Do they represent the voice of the people? Should we be going to war without the consent of our representatives through executive acts? Who's making these decisions? These are all questions I don't have all the answers for. But I think most people are good and they can't imagine this type of madness. So it's hard to let it sink in. And that's a personal opinion. And the closer you get to the circles of power, the people that know, the more jaded you become. I think the larger population, based purely on the conversations and the polls and everything else, the distrust meter is rising. And long answer to a short question, I think it's really because most people are too good to believe this is possible. Yeah. And yet it's starting to happen. After COVID and now this, we're all starting to scratch our heads and say, how could decisions be this mismanaged? What's really going on? I don't have all the answers. But this war has two very different narratives, and we can talk about it, but it's clearly a mess. It is swampier than anything we could imagine, and this is not what anyone was expecting, and yet history proves that here we are again, war and currency debasement.
Well, it's interesting, Matthew, and like I won't get into the makeup of what he said, but as the invincible forces that you just alluded to, like Eisenhower had a great farewell speech that touched on that. And with monetary systems, you know, when they come under pressure, like you alluded to, it explodes into the real world and people feel it all over the world. Right now, as you touched on at the beginning, is the clearest pressure points are the energy market and escalating geopolitical tensions. With what's unfolding in the Middle East and the broader energy markets right now, is it purely geopolitics or is it a symptom of deep stress in the global monetary system itself?
Well, that's a great question. I mean, there's clear chaos, and the question is it engineered chaos? With debt levels this high, with the dollar under stress, not disappearing, not even being replaced by the yuan or the rubles or world reserve currency, with this debt stress and this currency stress, and the petrodollar stress, because well before Maduro was taken by the Delta forces, he was in conversations with China to increase. I think China only took 5% of its oil from Venezuela, but it gave 95% of its oil to China. China's an invisible party here. So the stress politically for that petrodollar, again, that was so powerful before we went into Venezuela, and then get Venezuela done first so then we can go to Iran next. I think that was very clearly, again, as I saw, foreseeable. I think the narratives have not been genuine. I think they've been very disingenuous pre-war. And now as we're in this war, they don't even call it that for executive privilege reasons, for executive orders. This can't be called a war, so it's a conflict. But right now, as we're in it, we're really seeing two different narratives. I mean, again, this is April 13th. I should say that because in 10 minutes or tomorrow, the headlines can be very different. But as of the last few days, we've been told different narratives. The Hormuz is open, free, no risk. Uranium enrichment's going to be fine. We're going to be a U.S. joint toll collector. Hegseth, the Secretary of Defense, was basically making victory laps, and the war is kind of over. We've eradicated the risk. It reminded me a lot of Bush on the USS Abraham Lincoln at the early days of the Iraq War. And then that was followed by 3 years of Sunni and Shiite slaughter in Iraq. It was hardly game over. So there's this narrative that we're in the clear. I think the headlines disagree with that to the extent we can find them. Iran, of course, has got its 10 points, control of Hormuz, $2 million shipping fees. Israel, in the meantime, isn't going to stop killing Hamas in South Lebanon or whatever. That's their own thing. We've got guys like Wyckoff and Kushner who are not diplomats by any stretch of the matter. They're deal makers. So when you get to this dishonesty, we don't really know what is the state of the Fifth Fleet in Bahrain. Are they wounded? How many missiles does Iran really have? Did we destroy 4,000? I don't know. Has the U.S. lost Galaxy helicopters, Super Galaxy helicopters? I don't know. But I do know that right now we haven't created a regime change. We've just created a leadership change. And so there's just this constant confusion and a lack of transparency of our plan A or plan B. Again, that shouldn't be partisan. And we're having a massive cost bleeding right now at a time where we're at too much debt to suffer this. We're looking at another $1.5 trillion military budget for 2027. I got to think, again, without trying to be a military expert, the amount of money being wasted. We gave, again, remember, there was a proxy war in the Ukraine before all this. I know we gave Zelensky 7 Patriot missiles. Those were $1 billion each, and Russia blew them all up. I think we'd like those $7 billion and those Patriot missiles back right now. And it's just the perfect storm of a mismanaged policy financially. Again, I can't speak entirely militarily. There are some say that Iran is done. I don't know, but I don't think it's completely over. And even if it were over today in a peace, love, kumbaya moment with flowers in our hair, the damage that we've done to the infrastructure is going to take months, if not longer, even years to repair. So the inflation is coming. But in the backdrop of this is a reshaping of this global monetary system that was up until a few years ago, certainly prior to weaponizing the dollar in 2022, unthinkable. Now it's very clear that the dollar is losing its hegemony. It doesn't mean we have to have a petro-yuan or a yuan as a reserve currency. They don't have the bond market or the exchanges to do that. They don't have to. For China, they just need to think of the petrodollar as like a 6-shooter, I always say, like in the Old West. That petrodollar is a powerful pistol, but there are less and less bullets in that 6-shooter. So it doesn't mean a petro-yuan has to come, but if more and more of the BRICS nations, and certainly China in particular, gets a non-dollar energy solution, that petrodollar becomes weaker. And so this is a real pivotal moment right now. And I think if we can, I'd like to talk about the economics of this war more in detail. The parties have very different interests. And I think it's also in the backdrop of 5 or 6 real significant economic risks, from the bond market to the debt markets to the stock markets, which I think deserve a little attention. But we are clearly, Alex, at an inflection point. Yeah. And again, the fact that we're seeing war and deflation and this fourth turning is really history in motion, and it's history repeating itself.
One, and as you mentioned, Matt, like you brilliantly laid out about how energy is never just about barrels. It's about how the entire system is financed. And for decades, the deal was simple: oil priced in dollars recycled into U.S. treasuries. And how intact is the petrodollar recycling system today? Mm-hmm. And where are the first serious cracks appearing? Like, it's interesting. You mentioned the toll, and I noticed last week or the week prior about how Iran is now using, the UN and but now also cryptocurrency. And one of the other things a lot of people, I think, have forgotten about is Iran and Russia came out a couple years ago and mentioned about the gold stablecoin that they're working on for international trade. Yeah. Do you think the petrodollar, with what's going on in the Middle East, is extremely under pressure? And is that what this is all about?
Again, the short answer is yes. And the symptoms of this and the signals of this were well before Venezuela and headlines in Iran. In 2024, 20% of global oil sales were outside of the US dollar already. This was post-sanctions. And that would have been unthinkable 5 years ago. 20% non-petrodollar oil. And I think this gets to the heart of the matter. And again, there are many different motives, and I'm not here to say what they are. I'm not on a conspiracy track to say Israel did everything or AIPAC got us in this war. Regardless of those things, which none of us have the answers for, if you just look at the economics of the petrodollar, I'm not saying it justifies wholesale removal of the civilization of Iran to achieve. But again, the the parties in this, obviously the U.S. is a key party, and yes, their key motive is to save the petrodollar. To your point, that petrodollar was no coincidence that it came out in the 70s, right after we decoupled from gold. And our biggest enemy, certainly for Kissinger and Volcker and Nixon and that whole crew, which is a fascinating story, their biggest concern was what was the gold price? What was the gold price? Gold was the enemy. Volcker called it that. They wanted to make sure that gold didn't rise and that the dollar didn't get too debased immediately. So having a petrodollar deal struck, basically at knife point, if you read Kissinger's biography, it was basically a knife point, forcing OPEC to not only sell all their oil in US dollars, which is a great sponge for an otherwise exported, debased inflationary dollar. Those oil producers then had to use some of their oil revenues to buy US treasuries. That was a massive win-win in the early 70s. That was when it was our dollar, your problem to the rest of the world. That was an exorbitant privilege. To lose that privilege is very scary to US power players. You can understand that. Again, no coincidences that we've had wars in places like Iraq, Libya, and Iran, and lately even Venezuela. But it's a very deadly, serious game. I mean, 45% of the oil that China gets flows through Hormuz. And again, this is an oil-centric world. So the U.S. is trying to save this very important system, petrodollar system. The other party that's not a hot party to this war, but is just as involved in this war as anyone else, is China. And Kyle Bass knew this decades ago, years ago, that China's main goal, even before its great renaissance, was a non-dollar energy solution or a non-dollar oil solution. They didn't want to be the dog wagged by the tail of the US dollar. They wanted a slow drip, again, not towards a petro yuan, but a way to purchase oil and net settle oil outside the dollar. And the BRICS as a group, and that includes the R, which is Russia, and the C, which is China, have been looking through deals that Kobayakov and Glasiev in Russia, and the BRICS have been trying to find a way to net settle a lot of commodity trades with gold as the net settlement, not the US dollar. Oil is certainly one of them, but a weaker petrodollar doesn't mean the end of the petrodollar, but that is a way for China to dethrone or de-king the US dollar. So China is a clear party to this. In terms of Iran, which is obviously another key party, there are many who are saying that this is the art of the deal, that Trump is using chest puffing in the military to play some kind of 3D chess. I'm not a great chess player, but the first rule of chess, if you're ever learning it, you're taught, always assume your opponent has a better move. I think for Iran, Iran's move here isn't to necessarily win a military conflict. They just need to endure long enough, much like the Confederacy in the Civil War, endure long enough so that the Union wants to give up. And so they can use Hormuz as a lever to break this Western U.S. financial system and discredit Trump. Again, they don't need to win, just endure. And Iran, love them or hate them, they see the logistics. Trump clearly, like Wall Street, planned for a short war. And that's always how wars are. Again, in Germany, Weihnachten's in wieder zu Hause, the we'll be home by Christmas. That was the big thing in World War I and World War II. Again, I don't know how long this war is going to last. But Wall Street's been pricing a 2-week war for the last 10 weeks. And I think Trump also planned on a short war. But Iran is saying now you're in a financial slaughterhouse. That's the terms the Iranians are using. And their strategy is to crash the global economy and see the NASDAQ or the bond market go no bid, which would force the US and its central bank, like the UK and EU, to go QE to the moon here to sustain the bond market. That would debase the dollar and that would discredit the system. So these are clear, Iran, whatever you think, they understand the math here. They understand the military realities of it too. Iran, meanwhile, Russia wants to expand its influence. It has plenty of oil and natural resources. It also has weapons. And I think the other party to this, the innocent party, is the GCC itself. Bahrain, Kuwait, Oman, UAE, Saudi Arabia, these OPEC nations. Kissinger's famous quote, to be an enemy of America is dangerous. To be a friend of America is fatal. And these quote unquote allies, these OPEC allies, all they really want to do is sell oil, get revenue, and buy gold. And for years, they've been on the fence between the American old system of the early 70s and the Eastern system of Asia. It's rising and China's rising. We remember, or maybe some have forgotten, that Biden had called Saudi Arabia the pariah state. And this was supposed to be an ally. And when Biden went to meet the Royal Highness of Saudi Arabia, he got a nice little fist pump. But when Xi went, he got a handshake. That was symbolic for a lot of reasons. Again, Saudi Arabia is a tenuous ally. They were at knife point with this petrodollar system in the early 70s. They've been on the fence since we weaponized the dollar in 2022, like the other BRICS nations, to start having conversations with China that were, again, unthinkable 5 or 10 years ago, of ways to kind of sell oil outside of this dollar. So the GCC has an interesting role to play here. And I'm not saying that all oil is going to be sold in gold and not the US dollar. You have to keep in mind that the oil market is 9 times the size of the gold market. If any incremental rise in gold, as China and Russia want as a net settlement for oil, any incremental rise would mean a massive uptick in the gold price just on the oil trade alone, not to mention other commodities. So that's important. But I think the other player here, it's a long answer, but it's important to set the stage, is the world itself. These global supply chains impact the cost of everything. And it's not just oil. The system is so much more fragile than we think. I mean, remember the 2008 great financial crisis. It took a small 5% mortgage default rate in America to send the world kind of on its knees globally. I think we're at that inflection point now. I think if we get 6 to 10% unemployment, that could be a recession to take down the US. I think if yields go above 5%, so there's a lot of fragility in the system in the US markets, but Europe's even weaker. Australia is running out of diesel. You've got oil-dependent nations like India, Turkey, Japan, South Korea, Southeast Asia, and Taiwan, who import 50 to 90% of their oil and gas through the Middle East. If there's any kind of choke point or clog in Hormuz, that's disastrous beyond just oil inflation. And I think the markets have assumed, again, a quick and peaceful solution. We're not seeing that again as of April 13th, and I'll end on this, Alex, because it's important, but in this backdrop, this CF, I don't want to say the word, this mess, we've got really massive weaknesses in the bond markets and the stock markets and in the labor markets. And if you look at the bond market, it's everything. To me, if you understand the bond market, you can understand all the other markets. And what we have is rates and yields are rising. That's a very bad thing in a debt crisis, in a debt backdrop. And interestingly enough, as rates are rising all over the world, but certainly in the US, the DXY is actually going down. That's like a banana republic move. It's not an interesting or good sign. And interest expense, even before the war in the US, on Social Security, Medicare, or on our US Treasury debt, was 20% higher than our tax receipts before this war. And now when you add in a $1.5 trillion military budget, we just don't have the revenue, the income, the tax receipts, the GDP to save that bond market naturally. And what's a little wonky is the net international investment position of the US, its piggy bank outside, is negative 80%. That means as we're heading into a crisis in the US bond market, 80% of our assets are held outside of the US. When there's a global crisis, for whatever reason, other nations which hold a lot of our treasuries, dollars, and other assets, including stocks, they need liquidity. They dump those assets, including US treasuries. That sends yields higher and interest rates higher at a time when we are broke. So the bond market is a massive red flag right now. The stock market, which is complacent like in a twilight zone, again, was pricing in a quick war. In my opinion, it's my opinion, but it's shared by more people than just the gold guys. It's Ray Dalio, it's Jeremy Grantham, it's Goodlack on the bond market too, is that at debt levels this big, something does have to break. I think it will be the S&P and the Dow and the NASDAQ. I think rising rates equal tanking stocks. I think where we're going to see this implosion in the stock market, again, in the backdrop of this crazy conflict, is probably in private credit. I'm not alone in that. Even Jamie Dimon is openly warning of the risk of these over-levered credits. I think the AI will save us. Hype is the exact opposite. I think AI couldn't come at a worse time for our labor markets. And when I look at the stock markets as a former hedge fund guy, people have to realize that when you see widening credit spreads, that is a 100% red flag of a bear market coming. So the bond market and the stock market and the job market are pricing in a lot of pain. And I think the other big risk here is the net loss of jobs. It's not like our Bureau of Labor Statistics or our labor data is getting better. It's getting worse. We've had 13 consecutive months of revisions. We've got 92,000 lost farm roll payroll jobs recently. And we have to remember that in 2025, as we ended the year that came into this war year, we did not only did we not see a net increase of jobs in the U.S., we saw a net destruction of jobs. So that's like another massive signal in this. We keep that in the context of this. And to your point earlier, Alex, even Jerome Powell, who clearly is no friend of Trump right now, has less fear to just say the quiet part out loud, the elephant in the room. Our debt levels are way beyond our income levels. It's no longer sustainable. He's basically saying we're way too broke to be doing this. And I think finally, and I'll end here, is the lies, the dishonesty. I think that is hard to quantify trust. Gold is a barometer of that, but I think it's very hard to quantify. Probably the most important factor economically is trust. And as I said earlier, we know that we've been BS'd about, the Bureau of Labor Statistics, the BLS, you take the L out, that gives you the real name of the Bureau of Labor Statistics, the BS department, where they're giving us labor data that's always revised, the transitory inflation lie, the non-recession and recession lie, the Doge USA, all that Liberation Day nonsense. But meanwhile, we've had crickets from the media, the financial media, on these risks. And we've seen some tricks in the markets, in the futures markets, where some small amount of parties are front-running peace negotiation talks or headlines. They seem to have insider information. There seems to be a cabal making money on insider trades. Again, I can't prove this, but we all see the signals of it. So all of this, the bond market risk, the stock market risk, the labor market risk, the debt and the national debt risk in the US in particular, but everywhere in the G7, and then the dishonesty risk are converging at a time where we are in a war that doesn't seem to have a plan A or plan B. And the outcomes, no matter whether it's kumbaya today or a long dragged out conflict, are going to take years to repair. I don't see how we avoid a QE to the moon, the debasement trade, which Hemingway and everybody else sees. And that, of course, will be a very strong tailwind for gold longer term. We are very much in the first inning, the first quarter of the soccer game, the first chukker of the match. There's a long way to go for gold. And again, that's not just a bias from a sell side guy in the gold space. It's shared pretty much universally right now.
One, and with that, Matt, like I know one of the things that that I've been taught, like I put out a meme like a couple years ago about how Japan is like, it was outside the Bank of Japan and it was a cartoon that it's like a circus. You have yields right now going up. You have inflation there continuing to tick higher. You have the yen that's extremely weak. They're also one of the largest owners of U.S. Treasuries. Now, with everything that you just mentioned on the bond market, how much of a concern is Japan? And do you think, I totally agree that QE to the moon, they might not have no other solution in this broken monetary system that we're in. But like, do you foresee a situation where we could see broad-based fixed yield curves and items such as that?
Yeah, I think that's a really great point, Alex. A lot of people have kind of forgotten about Japan as a canary in the coal mine or a leading indicator or kind of a parallel universe to where America's headed. The Japanese carry trade is over. It's a critical indicator, which I don't think gets enough attention, especially now with all this war fog. The 10-year U.S. Treasury and the 10-year Japanese government bond, or JGB, the yield differential is shrinking. This is fascinating to me. The yen is weakening rather than strengthening as its yields are going up. And the bond markets are discounting the safety of bonds for a currency. This is, again, very much an alarm to me because Japan and the U.S. are not supposed to be Turkey, Venezuela, or Argentina. Their currencies are supposed to reflect confidence. Their bond market is supposed to reflect confidence, but they're trading just like another asset rather than a safe currency. Japan is in the same Hobbesian choice as the Fed, the Bank of Japan, there was a period of, I can't remember how many different finance ministers they had and how many different central bankers they had. They even had an assassination of a premier. Their situation is crazy. And if you've been to Japan post the Nikkei crash, it's like Back to the Future. Time just stopped in 1989. They're broke. But the Japan does have a higher foreign piggy bank or net international investment position. But I think what we're seeing is when you see a currency like the yen or the dollar weakening as their yields are going up, when you're seeing this Japanese JGB 10-year yield, which was at basically zero for 28 years, creeping up, even the carry trade that was necessary to arbitrage a strengthening US S&P and Dow is weakening. But I think what we're seeing with the yen and the dollar are very, very strong harbingers of what's going on. But Japan, the Bank of Japan, like Powell's Fed or whoever replaces Powell, has this Hobbesian moment, this choice to save the yen or to save the currency or to save the bond market. And my strong opinion is, and this has been true throughout history, going back to the 1500s or then some, that these broke regimes, whether they're Japan or the US or the banana republics, will always sacrifice their currency to save their debt markets. And what we're seeing with the yen and what we're seeing with the dollar are two kind of lost ships in the same tide without a rudder. I think the vast majority of investors don't really understand that connection between yields, currencies, debt, especially when they're measuring their wealth, whether it's in yen, euros, Swiss francs, any paper currency, or the US dollar. You can have relatively stronger currencies. I would certainly rather have a dollar if I were a Turkish doctor or if I were in Argentina. A lot of my friends in Argentina save in dollars more than pesos, of course. But in absolute terms, all of these ways of measuring your wealth in a paper currency is an invisible theft. It is an invisible tax. You're being robbed. Your government isn't helping you. Americans may be stronger than the Turkish lira or their dollar stronger than the peso and weaker than the Swiss franc or the euro. But as a group, these paper currencies are melting under the heat of their debt levels. It's incremental. I love the name of Ronnie Sturfula's fund, Incremental. It's incremental debasement, and then it becomes exponential. I think we're heading into that exponential phase right now. But Japan is an absolutely important issue. And, their debt levels are even higher, and their debt to GDP is even higher. And their new leader is a nationalist who's going to promise lower taxes. And yet, how is she going to do that? And how are they going to survive? Her only answer is really better spending habits. I've never seen a government broke come up with better spending habits. They tend to spend more and get caught in a debt spiral and a debt trap, which Japan is in. And frankly, as even Jerome Powell would say, the US is in now, because even if we have inflation, we can't raise rates to fight it, because that just the cost of our bar tab gets even higher. So to pay our bar tab, we have to print more money to save our bond market. So the very policy, the fiscal dominance policy of raising rates to fight inflation is inherently an inflationary policy at the end of the day. Is all roads lead to debasement and to inflation. Even if we see deflationary moments like a market sell-off or a recession, the end game to save this will be debasement. And again, this is not an opinion just in the gold camp. It's shared by anyone who understands the history of credit markets, understanding the bond markets in relationship to currencies. Japan and the yen, the US dollar and the US central banks are all in the same debt trap. And it couldn't happen at a worse time. It's not like the ECB or the Bank of England are going to save us. And so gold is becoming a de facto reserve currency for a reason. It's not just a de-dollarization meme. There's a reason since 2014, central banks have been net stacking gold and net dumping US treasuries. That incremental game became exponential in 2022. Central bank gold stacking increased 5x since we weaponized the dollar in 2022. You can't ignore that. You can't ignore what the central banks are doing. It's just like, again, when you see an army approaching your river with flags and cannons and horses and white tents for miles, you don't need to be a military expert to see they're preparing for something. When you see what the central banks and now even the commercial banks, which we should talk about, are doing with gold, you don't need to be a gold bug to see that they're clearly preferring the store of value of gold over the store of value of paper money in general, or the US dollar in particular. This shouldn't be a debate anymore. It really is that obvious. It's very hard for politicians to admit that right now. Of course, you can't blame them, but it's very hard for them to realize that we are at the end of a credit cycle. We are at the end of a paper money cycle. We are at the end of a dollar cycle. I don't think that's sensational anymore. I just don't.
Well, and it's funny, Matt. It's like, I know both of us for years, like a lot of people, I remember when I started chatting about gold close to 10 years ago. And back then, like you mentioned, a lot of people did think it was sensationalist and fear mongering. And you fast forward to today, and I know you predicted it about how the effects of what happens when you weaponize a currency to the extent that the United States did on during the whole Ukraine conflict.
Right.
And, with that, getting back to the economics, we have seen, it's different, but we've seen a similar movie as what we're watching today, with regards to Middle East chaos, energy
Mm-hmm.
shocks, monetary breakdown, and that was the 1970s. Are
Mm-hmm.
are we watching a replay of the 1970s in terms of the stagflation risk?
Oh, absolutely. In some ways, it's even worse because in the 1970s, our public debt was around 250 billion, not 39 trillion. Our piggy bank and our ability to fight that inflation with rising rates, which Volcker took to 18, 19%. We had oil shocks, we had embargoes, we had Vietnam, we had problems in the 70s, but we didn't have this cannons and cannonballs of debt on our shoulders that we had to carry. That limits the central bank or the Fed's options. It limits anyone who's in the White House's options dramatically. I've said, again, this is neither pro or anti-Trump. You could have Papa Smurf in the White House, or you could have Santa Claus at the Fed. There's no miracle solution now. The debt has made our options untractable, impractical. We don't have flexibility through rate hikes or rate cuts, expansion or tightening of the money supply. These little BB guns aren't going to solve the problem anymore. They're squirt guns even. And again, we can't be Volcker in 2026 as we were in 1973 or 74 during the oil crisis, the embargo, or even later in 79, 80 with the Iran hostage crisis. We don't have the same tools. That should be more honestly described. Again, and because we don't have those same tools, we are more desperate, we are more militant. This is desperation, it is debasement, it is inflation. It's very much like the 70s, with the key difference is we don't have the tools to fight that inflation. We can't raise rates to fight inflation. And we can't even seduce OPEC like we could. There was a time pre-74 where OPEC was saying, your dollar doesn't give a lot of yield, and we'd rather just settle it in a dollar that was backed by gold, but you took that away in 71. So in addition to Kissinger basically at knife point forcing OPEC, if you read his biography, he admits it. But we also had Volcker chunking up rates. So you had a net return, a positive 8% net return on the US Treasuries. Yields were good. The dollar was strong. That was a more sexy, attractive dollar for OPEC in the 70s. Right now, our yields are negative. If you look at real inflation, our dollar is massively indebted. It's not that attractive anymore. I think longer term, OPEC would prefer a dollar-backed solution rather than a US dollar-backed, a gold-backed solution rather than a dollar-backed solution for trading oil. It's a hell of a lot more stable to trade in a gold-backed dollar than a non-gold-backed greenback. So much is different now because of the debt, because of the negative yields on our US Treasury, because of our distrusted, weaponized, debased dollar, that we just don't have the same appeal to OPEC. Again, it doesn't mean OPEC leaves us for Russia or China tomorrow. It's in their own benefit to be more creative. And again, I'm saying to be a friend of America is fatal, as Kissinger said, because this is an inflection point. And it is a very different setting than the 70s in terms of where US debt is, the home of the world reserve currency, the absolute purchasing power of the world reserve currency, the negative yields of our 10-year sacred IOU, which was supposed to be risk-free return, which as you fast forward from 73 to 2026 is return-free risk. It's just nothing like it was in the 70s, despite how crazy that time was. We just have less and less tools than we did then, and it's desperate now.
Yeah, and with that, Matt, like obviously the other thing that I feel a lot of people don't like to even believe, but there's been massive moments in history, like 1944, Brentwood's, nearly at the end of World War II, and then 1971 when the anchor of the gold convertibility was cut. Of course, President Nixon said it was temporary, but 1971 didn't just change policy, it changed what money is. And how much of today's chaos, and with everything that you've described so far in the conversation, how much does that reflect from that single decision in 1971?
Oh, absolutely. 1971 was a turning point monetarily. You mentioned Eisenhower in 62 or 61 before he passed the torch to Kennedy, who was assassinated not too long after. That was a turning point for America as a trusting country, because that's, I won't get into the weeds of Kennedy's assassination, is clearly an inside job. Everybody knows that. But what did Eisenhower warn about? The military-industrial complex. That's where we are today with war. But when you look at the turning point economically, when we welched on the 1944 Bretton Woods promise to have a world reserve currency that was redeemable in something real like gold, that was absolutely a turning point. But again, to Hemingway's use of the term political and economic opportunists like Nixon, he, again, to your point, he promised that would be temporary, that that the US dollar would be just as strong tomorrow as it was today. Those were two bald lies. At the time, even prior to decoupling from gold in 71, the then Fed chairman and Secretary of Treasury were wandering through Congress, making a case that gold was going to get weaker and the dollar was going to get stronger. Those were two more lies. Gold has gone up 8,000% since 1971. The dollar's lost 99% since 1971 against gold. So as you talk about that dishonesty theme, the lies in 1971 were extraordinary. It was an absolute turning point. But these political and economic opportunists like Kissinger, like John Connally, like Richard Nixon, love him or hate him, they were only thinking short term. Connally was very cocky. Again, our currency, your problem. We're the world reserve currency. It's the 70s. We saved the world in the 40s. We've got the petrodollar. We've got the COMEX to manipulate gold and silver are down. They're the antagonists to our dollar. Between the COMEX and OPEC, it is your problem now. You'll eat our sandwich of inflation. The rest of the world has to take it. Sorry we welched on 44 in Bretton Woods, but it's your problem. And that was actually true for a long time because that was over 55 years ago. So, okay. But again, that's the short-sightedness of political opportunists. 55 years may seem like a long time, but in the history of a nation, it's not that much. We mortgaged our soul and our currency in 1971, and we're paying for that in 2026. If you go back to 1789, when the founding fathers wrote our Constitution, in the very first article, they made it very clear. That's the first article of our Constitution. Don't debase the dollar. Don't have a dollar not backed by gold and silver. It was very much implied in the first article of our Constitution. Nixon welched on that openly. There's a longer history on that. But I'm saying in 1971, the suspense was off. We'd gone on and off the gold standard during the Civil War and the Resumption Act, blah, blah, blah. But when we officially welched in 71, which was not temporary, because 55 years later, here we are, still ungold backed, we did short-term pleasure, temporary prosperity, as Hemingway would say, for the permanent ruin to come of currency debasement and war. So you fast forward 55 years from that temporary prosperity, a ripping inflationary stock market, a debasement of the dollar, QE to the moon, modern monetary theory, all this nonsense created a massive wealth disparity, a massive insider class. All of this inflation benefited the top 10% of the US. But where are we now, 55 years later? In that permanent ruin, that critical turning point that was 1971. We basically mortgaged the short-term pleasure and handed it to the next generation. My kids' generation is very different in their 20s and 30s than you and I were in our 20s and 30s in terms of opportunities and in terms of purchasing power. So you can't overstate enough, what a stupid decision that was in 1971. And you can talk about the cross of gold and William Jennings Bryan and the gold-backed dollar would have ruined us. But no, going off the gold-backed dollar was the beginning of the end. But there was decades of temporary prosperity, absolutely. But it was paid for by a debased currency, a dishonest policy, and we're suffering the consequences of that one generation later. And I was born during that period. Now I'm seeing it play out. But I enjoyed the 80s and the 90s. I enjoyed the dot-com bubble. I enjoyed the trade and the arbitrage and the fat pitches that the Fed was giving us in this Pavlovian market. If the Fed was dovish, go long. If the Fed was hawkish, go short. It was that simple. It's that centralized. But now we're way past that. We're just measuring our wealth in useless paper money, getting more useless by the day.
Yeah. Well, and it's I find it unbelievable, Matt, how so many of the wealth effects that so many of these economists in central banking chase, they think it is prosperity. And I've always said it's prosperity for who? It really helps the financial elite. But like you fast forward to today, you have so many of, as you mentioned, you have like this up and coming generation. They go to school, they bury themselves in debt. They can't find a real job. Yeah. And then you see all these underlying extreme polarization movements in society, and people don't realize the interlinking of your financial and economic conditions to the underlying reality that we face, and
Yeah.
it's such a groupthink mentality in central banking, and that's one of the biggest issues. And when we removed that hard constraint in 71, something always filled the void, and in this case, it was the fiat monetary system. And since 71, you've been you've been mentioning this throughout the entire discussion. We've seen exponential debt growth, constant
Hmm.
central bank intervention, and then permanent dependence on liquidity. Did the
Yeah.
system actually evolve, or did we just normalize something that was fundamentally unstable?
Yeah, I think we normalized something fundamentally unstable. I mean, Andrew Jackson, very flawed man. I'm not here to say I'm a Jacksonian. He described the Fed, the possibility of a U.S. central bank at the time this past Jefferson and Hamilton in the middle 1800s. Jackson described a central bank as the prostitution of our government at the benefit of the few at the expense of the many. That was very prophetic because, yes, it definitely benefits the top 10, 20%. It absolutely is at the expense of the many. Because when you can debase the currency and print as many dollars backed by nothing and have the Fed, it is a private, I mean, it's a whole other hour of discussion of what is the Fed. It's a private bank. Its shareholders are private banks. Its board, it's insane. It is, I think, the greatest crime in American financial history in 1913 when it came into law officially. Again, whole other hour discussion on
On
the
Jekyll
Fed.
Island.
Jekyll Island. Lindy can't make this up. It's so classic. But it really was, as he warned, a prostitution of our money for the benefit of the few at the expense of the many. It was a cabal. It was a mafia with fancy names and fancy titles. And what did it do for the many? It gave a private independent central bank, which is unconstitutional, which is neither federal nor a reserve, which sits on Constitutional Ave and has a very federal looking edifice and power. It gave them the power to control the supply and cost of our money. And so they debased that money, they front run that money because the inflation went into real estate and stocks, which again, the insiders have more of. The middle class doesn't have a big stock and real estate portfolio. So as those assets inflated, the middle class, the Ganzamenga, the unwashed masses, got nothing. They got a debased currency slowly losing its purchasing power, slow drip, death by 1,000 cuts, day after day, year after year. Yes, in different cycles. Yes, different relative to other currencies. But in absolute terms, what did the Fed give us since 1913? They didn't prevent recessions. They didn't prevent boom and bust cycles. They centralized the markets. They created chaos, and they debased our dollar, just as our founding fathers warned they would 250 years prior to this. So we are getting the karmic result of a mismanaged nation, of an insider group, of a cabal of the private, at the expense of the many for the benefit of the few, who I know live in the suburbs of Washington, D.C. and play polo in Northern Virginia and buy second and third homes on Long Island or the Hamptons or Nantucket. They're not all criminals, but they benefit. Well, the mass of the society gets hoodwinked and robbed at gunpoint without even realizing it because their purchasing power, the currency they measure their wealth in, is being stolen from them invisibly every day. And yeah, this all began in 1971, but it really began in 1913 when we made this beast from Jekyll Island, the fourth branch of government, which was never the intent of our founding fathers. And it is a disaster. And every time I walk by the Fed, it almost puts a chill in my spine if you actually understand what it does. But it does look so powerful, so official, so governmental, so intelligent. But you make a Faustian deal when you join the FOMC. If you understand history, you know you're not part of the greater good, but it does get you that second home out in the Hamptons. So who cares?
Yeah.
This is the short-sighted thinking of political opportunists. They are mavens to a system. They are not, as I said at the beginning, serving the public good. And the public is catching on to that right now.
Yeah.
And the gold price is certainly catching on to that.
One, I love that you mentioned so much in this combo, Matt, about like the Constitution and the founders of the Constitution. A lot of people don't realize like one of the first buildings in the United States when it was formed was a mint. And you know, with the founders understood the destruction of what happens when you debase a currency, what it does to the populace. And you know, when guys like me and you, when we chat like this, we're starting to get people are paying attention a lot more now, but for years, everyone just thought gold was this pet rock. It was this item that's just antiquated and it's going out of style. And, you know, with where we are right now, I have to ask you: do monetary systems reset gradually, like we've had kind of this slow progression the last, I'd say, since 2020, or are they violently forced to, like, suddenly?
This, I've had many debates with Brent Johnson, who I admire so much. We have different views on the milkshake theory and the strong dollar and the safe haven. We have very similar views on gold. I think he's very brave to stand for something. What he did say, which I think is absolutely true, is if the U.S. dollar is to lose its hegemony, or if the DXY is to not hit 150, which I don't think it will, it would have to end violently and suddenly. And I think he's right about that. And that is why this conflict we're in Iran is no coincidence. It is very violent, even if the death toll in Iran is higher than it is for U.S. servicemen and women, which is appalling to even think about, but even measure it that way. But we are at a violent turning point, not just in military terms, but economically. There's going to be massive violence economically and socially as purchasing power gets debased, as supply chains get cut, as infrastructure breaks down. If we have electricity failures, delivery failures, it's humanitarian. It's not even economic anymore. And again, I don't know how this plays out. The worst case scenario is unthinkable. That's mushroom clouds galore. But short of that, we're talking a massive disruption in the financial infrastructure and the currency systems, the monetary system. That's not sensational now. This is agreed to by UBS, Goldman Sachs, et cetera. Their private wealth management letters just came out. They're just as concerned as I am and you are. To your point, for many, many decades, even generations, gold was this pawn shop asset, this pet rock. And I understand why. There was a lot of reasons why that was presented that way. There was a vested interest in presenting it that way. But I think what's great now, because of platforms like yours and many others, and Egon von Greyer's, who saw this decades ago, and others who've seen this, is that education gap is tightening now. More people are forced to look into alternatives to paper money. Many may go to crypto as an anti-fiat solution. I'm not here to criticize that. It's a whole other rabbit hole. But at least they're feeling it, and they're distrusting the current narrative more and more, and they're at least looking into the history of real money, of which gold clearly is, from the Constitution. But to your point, the founding fathers in the 1780s, they saw what happened to France in 1789. It was literally QE 1, 2, 3, 4, and then the guillotine, literally. They saw that. They were thinking of that. They saw it happen to England with the currency there. They saw the John Law era of 1720. So we don't have the excuse to say history never warned us. We're right where our founding fathers warned us we would be. Again, they're flawed men. I don't want to get into they're perfect, and they had all kinds of other interests, but they were right economically. And to your point, what is encouraging, it's not an answer, but it is encouraging that more people are catching on, not as gold bugs anymore. It's an insulting term, because gold is real money. Yeah. Central banks have seen this for years. Pre-71, they held 70% of the reserves in gold. Today, it's only 30%, but it will get to at least 50%, because gold is becoming the de facto primary reserve asset. That's way beyond de-dollarization hype. Yeah. It's an FX reserve currency. The gold level is going up, the dollar level is going down. Again, central banks are stacking it 5x since 22. These are objective realities of history recorrecting. But to your point, it's already a violent change. It's already a chaotic change, not just militarily, but the social unrest we saw in the storming of the Capitol. That's an angry mob. It's not Bastille on January 6th or whatever, but it was angry, broken middle-class Americans. We see it. Again, get past the politics. Politics is an extension of economics, right? And the economics was failing. And Karl Clausewitz, the Prussian general and military officer, wrote in his book on war that war is just an extension of politics by another means. And if politics are an extension of economics, you can follow the daisy chain right now in this mess in Iran: economics, politics, war. It's tragically consistent, but sadly, that's where we are.
Yeah. Well, and when mentioning the pet rock side of things, I'll never forget when I had Dr. Ron Paul on my show, and he mentioned his iconic exchange with Ben Bernanke about when he asked if gold's money, and essentially Bernanke just says it's tradition. And I am so happy to see with Dr. Paul now at 90 years old, to see all his warnings and him speaking truth to power directly in the eye all those
Yeah.
things bubbling to the surface. So,
Yeah.
but with that, I have like with beneath the, the liquidity and all the debt and the policy, as you've mentioned so many times in this conversation, is the real battlefield is trust. And
Hmm.
are we seeing trust? Where are we seeing the breakdown or the loss of trust right now? Are we seeing it in markets, or are we actually seeing it in human behavior?
I think it's clearly right now in human behavior. The markets again are so Pavlovian, and the heads are so deep in the sand. I think the markets feel in some ironic way that even bad news is good news. If there's bad labor data, if there's bad military chaos, if there's bad inflation indicators, that means the Fed will have to become more dovish, right? And if the Fed is dovish, they're going to have to bring interest rates down again, which is hard to imagine to fight inflation. But given the Main Street indicators, which we haven't discussed, the 13 consecutive months of downward revisions in labor, et cetera. But Main Street is clearly in a recession, in my opinion. I've said that since 22. That's also just another lie from the BLS. But I think because it's being felt on Main Street, but the markets think that, well, this means incredible support from the Fed now. We have no choice. Even during COVID, when America was locked down, watching Netflix, and 500 new billionaires were made, the markets were ripping after that March sell-off in 2020. We had unlimited QE. The Fed balance sheet went up trillions in months, and the markets ripped into 2021. And so you could argue bullishly that because things are so bad, that they're going to print to the moon and stimulate to the moon, and that the S&P has a tailwind. But if they have an S&P tailwind, then we can make a bull and bear case on the markets. That's another conversation. But the markets just see more liquidity coming, and therefore more inflation in risk assets. And so bad news is good news. I think that's a very dangerous assumption, but you can understand it. And so the markets don't really feel the fear yet. And again, they think this war is going to be over tomorrow. Maybe it will be. I can't opine to that. But there's other reasons why the markets are heading for an uh-oh moment. But I think it's understandable that they see a massive wave of liquidity like we saw post-March 2020. And the fact that we had this bizarre disconnect between Main Street, which was rotting starting in 2020, and Wall Street, which was ripping at the same time. Again, the prostitution of our government for the benefit of the few and not the many. So Wall Street doesn't see it. Main Street more and more is seeing it. They're not experts on the COMEX or interest rate policy or even hawkish versus dovish, QE versus QT. Understandably, they don't know all that. How should they? Many of them have other things on their mind, but they can feel it. And I think that's what's happening. I think Main Street is feeling it first. Wall Street is just the worst thing to discount future prices based on current events, because they just see what I see is the Fed is the market. If it's dovish, the markets go up. If it's hawkish, the markets go down. Rates up, bad. Rates down, good. Bull and bear signals. This is not free price discovery. This is not Adam Smith supply and demand. That died a long time ago, which again may sound sensational, but that implies that really capitalism died a long time ago. We have a very centralized market.
Well, and it's like you said, Matt, it's like so many people pretend, or so many people think this is some grand mystery with regards to how, but these outcomes that we're seeing today weren't accidents. They're engineered. And over the last few decades, did central banks solve problems, or did they just compound them into something so big that like even central banks themselves, who, as you mentioned, with the Fed having they blew up their balance sheets over $8 trillion during COVID. If we see this QE moment where central banks have to inject more liquidity, and then even as we saw when rates came up, a lot of these central banks were taking huge losses. Don't you think they're even scrambling as well internally with how to deal with this? Yeah.
Well, Egon's right. You have to sacrifice your integrity the moment you take a job at a central bank. I've talked to Willem Middelkoop in Amsterdam in the Dutch. He's talked to central bankers. He's on a committee. They don't even want to talk about gold. They knew right from wrong. I was at the Knickerbocker with Greenspan and one-on-one questions. They know. Greenspan understood gold before he then became a Fed chairman. And Bernanke wrote a book called The Courage to Act. He was on a book tour He did know. Greenspan did know. Middle coup central bankers in Holland did know that they were wrong. But they didn't want to be caught while they were in office when things broke down. That was the big thing. They knew they were wrong. Egon was right. They all just want to get out when the music stops and be out of the central banks when things break. And they can blame it on extraneous events, war, a bad guy in Russia, or a virus, which was allegedly bat-made. I know that sounds sensational, but they do sacrifice their integrity when they come into political office. They do. That's my strong opinion. You can't quantify that. But again, I think when we tried to fight inflation under higher for longer in 22 and 23, what did we get? We got the biggest banking crisis since 2008. People forget Silver, SVB and First Republic and those things. What was that? That was a bond crisis because higher rates killed the U.S. Treasury market. That was on the balance sheet of these banks. There was a run on those banks. That was a bond crisis. 2022, we saw a gilt crisis. 2019, we saw a repo crisis. And then, in 2023, we had this banking crisis. So, of course, the bond market matters. Of course, the Fed was absolutely a party to that disaster. Powell's higher for longer gave us the biggest banking crisis since 2008. And they tried to blame it on extraneous events. No, that was because Fed policy got it wrong. And they just keep kicking the can and putting Band-Aids on these knife wounds with more accommodation or stimulus. These are absolute euphemisms for desperation. It's basically a lie. And the lie is being told, or the BS is being called out, not by other politicians, but by gold itself. The gold price is calling out the bluff, calling out the lie. Greenspan understood gold. He wrote some of his PhD theses on gold, but as soon as he came into the Fed, he forgot all about that. And so, again, you sacrifice something when you become a maven to the system, when you become an opportunist, as Hemingway said. And I'll just say it, they're opportunists. I don't trust them at all. But it's good for them. It's good for their book tours. It's good for their resume. And yet it's very, very bad for the people. And again, gold is calling the BS. It's not rising. The dollar is falling. And the dollar is falling because we're at the end of a credit cycle and because we've debased it. And the parties that were instrumental in debasing this was the FOMC and the Fed. And it's the same in the Bank of England. It's the same at the ECB and that bureaucracy in Brussels, which makes the Soviet Union look tame in terms of just an island of misfit toys, of children running policy. I'm sorry. It's an embarrassment. And the more people understand this, they'll realize this isn't just the rant of a gold bug. This is someone like Egon or Middlecoop or Jeffrey Gundlach or Jeremy Grantham who understand not only the math of markets and the reality of central banks, but the history of currency debasement. Again, this is nothing new. This is a cycle, and the dollar's at the center of it. And you can look at the M2 gold price, the M2 money supply versus the gold price, or the market price of gold versus the official gold holdings outside of the U.S. or U.S. Treasury holdings, and look at those ratios. It doesn't matter. I mean, they're important. They're certainly bullish for gold longer term. But the real thing here is just decades of temporary prosperity leading to permanent ruin. David Hume in the 1750s wrote a great essay on this that von Mises, everyone read. He called it the luxurious languor. It's the same thing as temporary prosperity. It's the same thing with the French in QE1 and 2. It was great times. It was the best of times. And then it was the worst of times. Because we're the world reserve currency, we could extend the best of times. We could exploit and export our inflation. We could petrodollar our inflation. We could squeeze gold and silver down on the COMEX, which is an open, legalized fraud on absolute price discovery. But we could do that for decades. But now it's our currency, our problem, because after 50 plus years of this, the jig is up. That is history, not a gold bug case.
Well, and that's where, Matthew, I have to ask you, it's like you did just touch on it, but we've recently seen the last few weeks about how they've denied it now that they're not going to do it, but the U.S. government talking about intervening in the energy future, oil futures market openly. I was just shocked that they actually said that. But, in your opinion, and you just kind of highlighted it, have the Federal Reserve and the U.S. government over the years been actively working to suppress or manipulate the price of gold for decades?
Oh, absolutely. I mean, again, right around the time that OPEC was created, a young Milton Friedman, a young Alan Greenspan, and a young Leo Malamud came to the CME in this cobweb little building in Chicago and added leverage and created the COMEX so they could put futures contracts and leverage on the gold and silver markets. It's a little bit of a long history, but that was no coincidence. Gold was the antagonist to the mighty dollar, and their biggest fear was rising gold. So what better thing to do than to bring in things like derivatives and leverage and futures contracts on gold and silver in particular in New York on the COMEX? Not at all a coincidence. What's even worse is that not only they allow massive turns of leverage, so that even though most of the parties to the COMEX were net long gold or silver, a handful of the small minority monopoly power of 8 bullion banks had the power to wake up every morning and go hundreds of leverage short against and paper contracts to keep gold and silver down. You've had Peter Umbro, others on the inside admit this. WikiLeaks, it's out there. But anyone in the commodities market understood this. This was legalized price fixing. That is not sensational. They could use paper contracts to force the price of gold and silver down for decades. And I think, yes, of course that was legal because the COMEX is self-regulated. They're basically like the BIS. They're almost immune from breaking the law. They are allowed monopoly powers and they're allowed leverage powers. And that worked for decades. But the problem was by 2024, they didn't have enough gold and silver to do the short squeeze, to do the paper shorts to the boot of the neck with gold and silver. So what did they had to do? They had to raise margin hikes. They do margin costs. They're getting more desperate. They don't have the physical gold and silver to play the game they've been playing since the 70s. That also is a leading indicator of desperation. But the illegality of it was open and obvious, but it was made legal by the New York Exchange, by the COMEX. It was self-regulated. Again, you could spend hours on the COMEX, but it's an absolute open secret that was price manipulation legalized. And we break the rules all the time. I mean, the Fed, very few people know that during the COVID crisis in 2020, the Fed was supposed to be a lender, not a spender, but they broke some rules. They created a special purpose vehicle, and they were directly investing in ETFs, bonds, and certain stocks. That was against the Federal Reserve Act, but there was a couple loopholes. It was technically illegal, but they did it anyway. It wasn't a huge amount of direct buying of assets, but they were doing it. That was against the Federal Reserve Act. It's dishonest, but in desperate times, we'll do desperate things. They will clearly affect the futures market in oil as a desperate measure. And I think even Besant himself said this, and Gunlach called this out not too long ago. I totally agree with him. As things get more desperate, the Fed will probably do is create an emergency measure where they're going to effectively, constructively soft default again on U.S. Treasuries. And so they'll take the yield on the U.S. Treasury from 3%, they'll force it legally to 1%, and they'll extend the duration of the bonds even longer. That is a default, and it is illegal. But in times of crisis, they'll make that legal. That, in addition to QE, will be ways they'll use capital controls or legislation to try and put lipstick on a pig to save this currency and save this bond market. Of course, necessity is the mother invention, and desperate times require desperate measures, all in the name of national security, all in the name of extraneous events, bad guys like Putin or Iran. I'm not pro-Hamas, I'm not pro-Putin, but I'm saying the real crisis and the real criminals aren't those bad guys. They're bad enough as it is. The real crisis is right under our own roof. It is our central banks. It is our politicians who are short-term focused and for generations, and certainly in the last 5-6 decades, have been absolutely culpable in debasing our currency to stay elected, to buy votes, to buy treasuries, and to buy time. We're just running out of that time now. And now, as the most desperate measure of all, we're going to war to protect our sacred dollar, which we have been debasing for decades.
Yeah. And with that, Matt, for decades, we've had integration, dollar dominance, and relative geopolitical stability. Now we have fragmentation, weaponized trade, and competing blocks. Is globalization being redesigned, or is it deliberately being unwound today?
Well, I mean, there's this whole debate about mercantilism or neo-mercantilism, which basically just means our nation first, right? And Trump was elected on our nation first and America first. There's a lot of controversy over that now, but I think the whole globalization Klaus Schwab model, which is dark, and another hour discussion there, or the me first nation is dark in some ways. I still believe in John Nash. If we can cooperate, that's the best thing to do mathematically under the laws of physics and economics. We're very far from that today. I think the European Union is another example. I think it's very fragile. If we have a real crisis, it cracks, it breaks. It's not just Brexit, it'll be other things. That was a symptom. I live in Europe. I see the difference between Italian, German, Swiss, Polish, and Hungarian mindsets and economics and strength in Spain and Portugal. When we had a crisis like COVID, you could see the cracks starting to crack, open. When we get into a real crisis, and I'm not here to predict it, we're already kind of in the first innings of one. It'll be very interesting to see what happens to the European community. That's a larger topic too, but I think the me firstism is going to happen, but that's not going to be clean. It won't be during good times. It'll be during messy times. I think what we're going to see is, and as things break apart, there will have to be some type of reset, more centralization, certainly desperate measures like trackable, programmable central bank digital currencies, stable coins to control. There'll be capital financial repression. There'll be capital controls. There'll be digital IDs, all these dystopian things that are already happening. That will accelerate. Again, that train has left the station. It's here. It's only going to get worse. But as these things fall apart, I'm not very good at the cocktail party. It's going to be very dark. It's already very dark. But despite that chaos and that mess and that dislocation and that centralization, that dishonesty, it'll be more nations for themselves. That is why central banks are stacking gold at such levels, because not that gold becomes the new reserve currency for China or Russia or some other nation, but it will be the most trusted asset for settling trades, for settling commodity trades, and for gaining credibility and leverage in this new post-reset abnormal dystopia that we're heading into. It will be messy going into, it'll be messy coming out of. Again, I don't see a peaceful, easy solution for fiat money. I don't see a peaceful, easy solution for global cooperation. I just hope we avoid mushroom clouds and high death tolls. And I hope I'm right on that. And I don't think anyone really knows, but I do think Hemingway and others and Middlecoup's Great Reset and these people, and Egon's thesis for years is the same, and Hemingway's is the same. We're going towards some type of ruin. That doesn't mean we have to sit in a corner, hug our knees, and go into a bomb shelter. But it does mean we have to be informed and prepared for the changes that are happening right now to our currencies and our debt, and are going to get worse before they get better. And sadly, that is extremely bullish on gold, which is why I chose this asset years ago, and many others have too. Not as gold bugs, but as common sense reality check on history and math.
Heading back directly into gold for a second, Matthew, like we're no longer just seeing gold accumulation, we're seeing gold repatriation, countries bringing it physically home. What does this wave of repatriation tell you about the true state of international trust, even with, American allies are wanting their gold back home? Like, what's your read on that?
Well, it's pretty common sense. We can get into all the history of what de Gaulle did in the 70s, or actually in the late 60s, 65 to 67, Germany 2013 to 17, bringing their gold out of New York because they didn't trust America. Certainly the distrust of the American dollar, and certainly the distrust of Trump America, love him or hate him, is on the rise. And France just tried to take 129 tons out of New York. I think they were cash settled, not physically settled. That's a whole other problem. But I think it's, we can get into the weeds, and some of your viewers really understand that, some may not. But I mean, to answer that, if you have a girlfriend living with you in an apartment somewhere in the world and things aren't going so great, and you start seeing maybe one day a couch is missing, or she's packing up her books, but everything's fine, or she's moving her kitty box to her mother's, or, in other words, if you start seeing them moving the furniture out before you have the we have to talk moment, you don't need to be a romantic genius to see that you're probably losing your girlfriend in the next few weeks. And I think as you see nations trying to pull their gold out of the COMEX or out of the US vaults and bring it home, it's because they are planning to break up slowly but surely with the American system, the American gold vaults, or the American IOUs and promises, and certainly the COMEX papers contracts. So they're playing the direction of the hockey puck. As Wayne Gretzky says, they're seeing the direction of the puck. I always use the wanker example of the polo ball. It's always 3 moves ahead before the backswing. They're preparing for the backswing. And so they're bringing their gold out. It is a very disturbing and very confirmational example of distrust, not only in Trump's America, but distrust in our dollar, our bond market, and even our gold markets. So yeah, it's a very important signal. And it's not a positive one for the future of the dollar or the COMEX at all.
And with that, Matt, like I know we chatted earlier in the discussion about the effects of 1971 and the temporary end of the convertibility of the dollar. But like now
Yeah.
today, you have China and Russia, two of the top gold producers on the planet. You have China, hardly any of their
Hmm.
domestic gold production leaves its borders. You have Russia
Right.
now practicing that same practice with not allowing any
Mhm.
gold or large denominated gold bars
Right.
leaving the country.
Right.
We're seeing like things, nations are actively building gold clearing and settlement. Nations like China, Russia, and
Hmm.
others, along with new
Hmm.
hubs in Hong Kong and Singapore, are pouring into physical
Yeah.
gold vaults, clearing systems, and infrastructure. What does this
Right.
serious build out of global infrastructure really tell us about how central banks and sovereigns now view the reliability of the dollar based system?
Yeah. Another great indicator you're raising, Alex, of just again more and more trust for gold, less and less trust for paper systems. I was just doing an interview on a German platform, a German-speaking platform, and it was the same question. India is coming up with its own exchange to come up with a better spot price for gold. We've seen the rise of the SPYMEX in St. Petersburg. We've seen the rise of the Shanghai exchange looking for more fair price discovery in the East because they're losing trust in the LBMA exchange in London or the COMEX in New York. These are not coincidences. These are not aberrations. They are symptoms, again, of a paper system and a Western system that is losing trust along with so many other things. Again, I'm not saying St. Petersburg or Shanghai are more moral or more superior systems than the West. I'm not anti-American or anti-West. I'm just pro-math. And if you're trying to think about Russia is involved in this expensive war in Ukraine, it's going to pale in comparison to what we're going to deal with in Iran. China, I don't want to live in Shanghai. I'm not interested in becoming Chinese. I'm not pro-China. They have a lot of problems. But as we've been blowing things up and losing hearts and minds around the world and spending trillions, they've been building infrastructure in Africa and other places in the developing economies. That's not stupid. They're playing 3D chess. As we're talking about QE up or down or rates up or down, we're still thinking we're the 1944 post-Bretton Woods Clark Gable America, the iconic America, the America that, of course, I love. I am a patriot, but I'm also mathematically somewhat aware that that America is not the same. We've debased ourselves. We've shot ourselves in the foot. So what you're seeing with these exchanges in India and in Russia and in China, they're going to have to play 3D chess. That means they're going to have to come up with fair price discovery in those exchanges to defeat the West in general, and the U.S. in particular, that has logged itself into very expensive wars and is losing global credibility. Again, it's not pro or anti-Trump. I think even the Trump base is scratching its head. We can talk, and I'm not trying to get political, but this is a mess. And you've got the Lindsey Grahams of the world and the Hegseths of the world, and we're going to destroy the whole civilization. I know that's going to offend people. I find that offensive, though. That's not presidential talk. That shouldn't be left or right. Americans in general should be ashamed of that and that kind of thinking. But take out my opinion on that. My conversations, the headlines here, the conversations in Europe and in Asia, which I travel to, is clearly trust is moving east from west.
Yeah.
And it's not just Trump's fault. Every president before Trump was spending and deficit spending beyond their means. Every Fed was abiding that crime, aiding and abetting that crime by printing the money to allow the government, the Senate, the Congress, and the White House to deficit spend to the permanent ruin that we're in now. But I think, to your point, India, China, Russia, they're building not a perfect system. They're building an alternative system. And again, we could spend hours on the problems in Russia and China. They have lots of issues, but they're not as debt-strapped as we are. Debt to GDP in Russia is very different. The gold reserves in China are much higher than the World Gold Council reports. We don't know what they are, but we don't even know officially what U.S. gold reserves are. So there's a lot of opaqueness and vagueness. I don't have all the answers, but the direction of the flows, the direction of the repatriation, the direction of the exchanges is moving from the old school, the West, London and New York, to the new school, the East. Like it or not, that's happening. Again, I'm not saying China goes unscathed. I'm not saying they don't have real problems. And I certainly don't like the Chinese political system. But in a lot of ways, we're becoming almost decentralized very slowly. We're less and less of the democracy and the freedom that we thought we were.
Do you think, Matt, that China, like in this, I know we're speculating here, both of us, but do you think China could have the as much as the 8,100 tons that the United States has on its books or more?
Again, I'm speculating. I'm not quoting me. Alistair MacLeod, who's an advisor at Von Greyerz, a couple of years ago gave a pretty convincing presentation in Frankfurt we were at together where China could have as much as 30,000 tons of gold. I don't know. I think they have a lot more than what the World Gold Council reports. It's possible that America has more gold than it reports. Maybe it's true of post-World War II. They got all that secret Japanese gold out of the Philippines. I don't know. The fact that we haven't had an audit is disturbing in itself. Remember, early in the election, in the Trump cycle, the tweets or the X's, whatever you want to call them, by Elon Musk and Trump to do an audit. That was part of the momentum. Yeah, Trump's going to get honest about our gold audits. We're going to get honest about a lot of things that never happened. The fact that this far into the administration, we still haven't had an audit should be concerning. Again, I'm not saying we have more than 8,131 tons or less. I don't know. And the fact that I don't know and no one does should be alarming. That's a red flag in of itself. And again, my personal opinion is that China has a heck of a lot more gold than they say they do. And there's a reason the Chinese are very close to their chest on this, but they are playing longer term. They're staying out of wars and they're stacking gold at record levels. They're not reporting that. The Chinese are notorious for not telling the truth about things that are good for them. And I think, as Kissinger again said, when we were talking about revaluing our gold certificates years ago, he openly said, be careful, because he who has the most gold wins. That seemed to imply that he thought maybe America didn't have the most gold. So even if we do a gold revaluation, which is, there's many strong cases for it, we have 20,000 gold, we let gold run, which ironically is in America's best interest now, and we get 20,000 gold, I think we will. If we revalued it ourselves in a new floor, then Kissinger's warning would be relevant, because if China does have more, or Russia has a lot more than they say, then he who has the most leverage. So be careful what you ask for. And to your question, Alex, I don't know. My guess is, and it's only a guess, and it's based on a lot of other people saying openly that it's not a guess, is that China has probably 10 times more gold than they say they do at the World Gold Council. I don't know. And I'm not trying to be sensational, but if even half of that is correct, if they have 15,000 tons or 10,000 tons, that's a game changer for the global system, which China is playing the long game for, where we mess around with the Fed policy. And I don't think it's a coincidence that, ETF gold in China is ripping when ETF gold in America was selling off during the war. And that China just had a major rule change that they're going to allow their insurance companies to put at least a 1% reserve in gold. Now, across all of China's insurance companies, that's a lot of gold they're asking for, and they're providing it. And they're a gold producer as well. And so there's a lot of unknown unknowns, but fairly clear signs that China probably has a lot more than they say they do. That's all I'll say with that.
Yeah, no, and with that, Matt, like I'll leave with one last question, and I really appreciate your time, and with everything, and I'm so happy I asked you about China, because that is a huge question mark that I think everybody believes, even the mainstream believes, that they're not reporting what they truly own, and that's an answer that eventually, when we find out, it could change everything. And with that, if the reset we've been discussing is no longer a question of if, but when and how, what practical steps should people be taking today, not out of fear, but just clear-eyed preparation to position themselves to be on the right side of what comes next?
Yeah, and again, this is where the eyeballs will roll, because I'm clearly selling my own book. I think the reset is already in motion. We've seen this with the slow drip of CBDC during COVID, when the IMF and the World Bank were calling this the Bretton Woods 2.0, blaming COVID or blaming global debt on COVID. That was so disingenuous. It was such, they called it, again, you can literally go to the IMF's website and see that cartoon of Christina just talking about, this is not our fault, this is COVID. And you had Klaus Schwab saying this is the opportunity, or the crisis of a lifetime, COVID. No, it was an opportunity to blame everything on COVID for what they themselves had done. And they were slow dripping CBDC back in 2020. This was telegraphing, almost like a classic Intel PSYOP, if you want to get dark. So I think CBDC, programmable money, trackable money, capital controls, yield curve controls, they're leaving the station and not turning around. That is something we have to think about. Stablecoin is CBDC. It's just issued by commercial banks and fintech companies, but it's tied to the hip of government control. So we're already in this desperate stage of centralization. We're in a desperate stage of debasement. So if I see, in my opinion, more centralization, more debasement, and more desperation, of course, my solution, as it was for many years, as folks like Egon taught me, or Middlecoop taught me, or I read on my own as a Wall Street Dragon Slayer lottery ticket winner, I started to figure out what gold was. I want to have a legal firewall between my real money, gold, and my government, which is getting desperate. I want it outside of the banking system, which is fractured. And I want it in a jurisdiction where gold is a protected asset. So again, one preparation for me is clearly the von Greyerz model. I got to say it. Yes, I'm selling my book, but I have absolute conviction in it. And I'm not alone in this, and I'm certainly not the only American who has some amount of means of gold in Switzerland, not just with von Greyerz, but in a lot of places in Switzerland. So this is nothing unique. You'd be surprised who some of the parties are who hold a lot of their wealth in gold in Switzerland. So that's one answer. Obviously, for many, and certainly the younger generation, another anti-fiat asset is crypto as an anti-fiat protective, highly liquid asset. I'm not anti-crypto, and I'm not smart enough to say which cryptos are safer. I've written a lot about it. I'm a little distrustful of how centralized the decentralized narrative of Bitcoin has become. But there is good and bad tokenomics. That's another thing people can look into for certain good tokenomics. There are smarter people than me that you can talk to about that. I'm old-fashioned. I'm in my 50s. I'm boring. I'm not about wealth creation. I'm about wealth preservation. And so for me, gold is one clear way to prepare. Another clear way to prepare, and this sounds Pollyannish, is to get as informed as you can about the history of money and the history of policy, and read some biographies of some of these insider hooligans that have gone on. Read Mike Lofgren's book on the deep state. It's not quacky, conspiratorial. It's hard facts. Get informed. Information is power. It's also boring, but it's far better than being emotional or partisan at a time where we're well past left or right now. We're in a math scenario and a desperate scenario. It shouldn't just be pom-poms for your political party. To me, they're two different stirrups to the same saddle. You got to get past that, in my opinion. Get past partisan. Start thinking of being your own central bank, your own advisor, your own informed consent. I think that information is incredibly powerful right now. I'd stay away from the long end of any government bond market as a safe haven. I would be very concerned about measuring my wealth long-term in paper currencies, whatever that is, Swiss franc, euro, dollar, Australian, Canadian. I would look at anti-fiat solutions. I would look at opportunities if you have some dry powder, whether that's stored in crypto, gold, or cash, for a mean reversion in this market, because I think subprime and I think private credit are big risks in this market. The only way to prevent a crash like 2008, and that's a whole other story, is to print money to the moon. And that, in that case, the dollar just gets weaker. But I think there's nothing that the central banks can do to prevent mean reversion in these markets. I think there's a reason Michael Burry, I know he's a cry wolf guy, or Warren Buffett are so heavily in cash. Why so many of the best value traders I know in the hedge fund space are in cash, not levering long. Think about why they're doing that. Think about why banks like UBS, JP Morgan, and Goldman Sachs, of which I'm no fan, or central banks, are positive and bullish. The CIO, the head commodity trader at Goldman, all bullish on gold. Unthinkable 10 years ago. So as you get all this information, you won't feel like you're a quacky gold bug kook. You'll understand that you have to be prepared. Gold can't solve every problem. It's not the only asset. It's just one pivotal allocation. And I think that's becoming clear. Again, have some dry powder when these markets mean revert. You can buy some value then. I'm not against speculation, but I hate chasing tops. I hate taking debt risk and IOUs that don't produce any return for inflation. If you're a smart guy like Frank Justra or Pierre Lassonde or Rick Rule that can get into the mining space like you understand, Alex, the equity side of precious metals is going to have a massive beta trade vis-a-vis gold and silver. I've talked to Frank about this. It's the moment of a lifetime for a guy who's already very successful. So for those who understand mining and picking their winners, it could be a huge opportunity. Again, I'm not one of those guys. And if you're not an expert, you could always go indexes, but there's generational wealth to be made in crises like this. But you need more than one YouTube interview and more than one expert to believe in. You've got to get your knowledge, and it doesn't take an MBA from a fancy school. It just takes time and a good dose of cynicism. I'm extremely cynical. I'm always asking where I could be wrong. So far, I'm pretty convinced that at least on the gold side, I'm pretty safe. But I think in the mining opportunities, big plays there with higher risk and higher reward. But please stay away from currencies, stay away from U.S. stocks, stay away from long-term treasuries. The moment you make the bid, you're losing money. And be very careful that AI is going to save you or that meme stocks are going to save you. And I'll leave it with that, Alex.
Yeah, no, well, I appreciate it, Matt. And let's definitely, we'll make sure that we don't do our next conversation in a year from now. We'll have you on a lot sooner, but really appreciate your time, Matt.
Oh, it's always a pleasure, Alex. Obviously I can never shut up. I love talking about this stuff, so I appreciate it.
All right. No, thanks, Matt. We'll chat soon.